It's Market Day Report. Here we are approaching midday, and the corn market just continues to move higher. Well, I say continues to move higher. We're nearly 2 cents off the day's high here at 484.5, but we're up 9.25 cents on a market that's gained over 43 cents here in this past month. Now, soybeans were lower yesterday, but we've added over 90 cents to this market. November at 12.39. It's at the top end of the trade range here, which is what, 12.25 cents or so. Anyway, we're up 16.25. We had a big overnight session for soybeans as well, but really led by this wheat market. And Chicago is up 27.5 at 705.5. We've been watching hard red, which has gained over $1.10 coming into the session today. So you can just add probably another 30 cents to that. 765.75. It's up 32.75. Spring wheat is higher across the board. Cotton up 73 at 81.15. So what's happening here? We welcome in the Director of Global Research with CHS Market Advisors. It's Ken Zuckerberg. Ken, I'm just going to take a stab here. Could some of this be tied to geopolitical risk?
Tony, you're spot on, and I think the letter of the day today is W, right? So we have war, we have weather, and we have wheat prices surging. So on the geopolitical side, clearly the re-escalation of a conflict with Iran is supportive and pushing energy prices up. However, the other part of the geopolitical equation is Russia, Ukraine. And what we've been seeing over the past couple of weeks, or at least the past week and a half, is attacks on both grain and energy assets, which is fueling a rally in the wheat complex, which is carrying over to corn and soybean as well.
Okay, war, weather, and wheat. Now, earlier this year, we did have a rally, at least on the hard red winter wheat side, that was related to the weather. Again, weather working its way definitely into this?
We certainly have a period of time where there's been mixed reports and outlook and some pressure on yields or projected yields due to the not only just the temperature, but the or drought, but actually the level of heat out in farm country. So there have been more than a few days where the heat temperatures at night remained elevated, which has put stress on corn and soybean crops. And based on some comments we received in from this week's wheat crop tour, again, there's always fits and starts about how permanent short-term temperature patterns will be. Likely to be rain coming in to provide some relief, but in the very near term, we think there is the possibility of incrementally lower wheat yields on the wheat side, which again, coupled with the Russia-Ukraine situation, is putting a lift to the market.
Well, and you tied this in, I think you mentioned energy in there. So as Director of Global Research, I know that energy kind of falls under your purview as well. What are you watching here a little more specifically on the energy markets?
Well, we're watching Iran, candidly. We're back to doing that, Tony. I thought we had a little bit of a break to where we could take maybe a week or two off of talking about it, but the ceasefire was fragile to begin with. It ended up being very tenuous. Obviously, there have been attacks between Iran and U.S. assets. This morning, Mr. Trump talked about how the death of the 3 or 4 service people will be repaid, and we're seeing the energy complex go up. I just feel the obligation, though, to mention that from a big picture standpoint, this continues a period of complexity, volatility, uncertainty in markets. And with this volatility continuing, the need for really being disciplined in terms of your futures management and risk management is important. Whether or not you call CHS Hedging or another broker, I think the main point is very, very important to understand where you sit with positions, especially as we go into month end and expiration dates.
Hey, Kim, before I let you go, I'm looking here at WTI, 86 bucks right now in the front month, 76 and change on the January. Is that, can we pull anything from that? Does the market think maybe we'll bring an end to this by the end of the year, or is that trying to suggest that the market's not really doing that?
Yeah, Tony, let me tell you how I look at it. We have a team that focuses on all the refined products and crude every day, so I don't want to speak for them. But what I will tell you is it's more interesting for me to look at the September and October figures because those had been wildly disconnected prior, meaning in April and March, April, and May. What I mean by that is they had not risen as much, and there was a view that things would revert to normal or at least lower levels in just a month or two out. What you see here is that month or two out has moved to, as you said, January, 4 or 5 months. So I think what the market is telling you is that they hope there will be a resolution, but the nearer term contracts are saying, gee, I'm not so sure.
Thank you. Yeah, thank you for explaining
so we're watching
that.
everything.
Exactly. I mean, we've heard that from others when this first started. Looked like it was short term based upon what some of those futures contracts had. Ken, always great to visit with you. Ken Zuckerberg is Director of Global Research, CHS Market Advisors. All right, quick break. Back with more markets on Market Day Report.